Welcome my dear customers. Today we are going to discuss about this sectoral funds. In sectoral funds we are going to see this pharma funds particularly today. So let us start. So go to Google and start veryresearchonline.com. Then go to this fund category. Then click pharma funds. So here you will see 4 pharma funds. Till now we have 4 pharma funds. Tata India Pharma Fund recently launched in December 2015. Other funds are there for more than 10 years. So you can sort this column by, here I sorted by 1 year return. This 1 year return, it gives SBI Pharma as a 28% and Reliance Pharma Fund for 20 and UTA Pharma Fund 14%. So I like to update you saying this sectoral funds are risky funds. So it has more risk than this equity diversified fund. So you need to do your own risk analysis whether to invest in the sectoral fund or not. So while we're doing the risk profiling, we must have selected you based on the risk profiling the sectoral funds. The sectoral funds, this Pharma Reliance Pharma funds are defensive in nature. So when the market goes down, these pharma funds won't fall much compared to the benchmark index. So it will fall less comparative to these other funds. So if the sector is not performing well, so your returns will be hit and you will not get the best returns from this pharma fund. But if a sector performs well, so you will get a more return than the diversified fund. So let us see this return profile and the risk profile of all these funds before investing these pharma funds. So here we'll see this 5-year return. This 5-year return SBI Pharma Fund has given 26% and Reliance Pharma Fund has given 21%, UTA Pharma Fund has given 17%. The 10-year record, this Reliance Fund has given 24% and SBI has given 16%. So let us see the risk stats. So any fund, before investing in any fund, you should know the risk. What's the risk in this fund while you're investing? So here you'll see this standard deviation, Sharpe ratio, and alpha, beta. So for a new investor, this is some jargons you'll not able to understand it. So let me say about this standard deviation. So if you see the lesser number of the standard deviation, then the risk is comparatively less compared to these other funds. So in this scenario, Reliance Pharma Fund has a less standard deviation. Then this beta is compared to this risk of this benchmark index. So Reliance Pharma has the less risk compared to the benchmark index. This alpha is compared how much return you're able to generate more than this benchmark return. In this case, the benchmark return is healthcare index. So the healthcare index is a constituent of many pharma companies in India. So each company has its own weightage in this index. So let us see what are the shares this funds holds. So this is the NAV value of this fund. This is a growth. This dividend option is there. This category is equity pharma. This is the total asset under management of this pharma fund. What is the expense ratio? This is the SIP returns of this fund. So this is the amount invested and it's the worth of investments. How you got more returns in this fund. So when you started from this chart, it's showing when you started investing December 1, 2012, now to December 1, 2015. So you have invested 37,000. So if you're investing monthly 1,000 rupees, so but your worth of investment is 63,000. So almost in more than 80% of the return you earn from this investing in this pharma fund. These are SIP returns. So these are about the details about the launch of this fund, return since the launch, then the minimum investment and the SIP amount, then this launch date, fund house. This is the 10-year return of the fund, 16% compared to 17.10. Then this BSE Healthcare. This SBA Pharma Fund is consistently performing for the past 5 years, so it has given more returns as than this benchmark index. The benchmark S&P BSE Healthcare Index is 26% and 19%. So it's a leader in this category. 3 funds are there, so it is a leader in this category. So here you will see the investment style. So it has invested in large cap companies. These are medium cap companies and small companies. This fund has invested both in growth and blend value. So you will get this a blend of both growth and value stocks. So here is the asset of these companies invested. This is Sun Pharmaceuticals, 18% of that fund invested. Strides Sassoon and Lupin, Aurobindo Pharma, Cipla, Torrent, and Natco Pharma. So this fund comes under SBI. So let us go to this analysis of this performance analysis of this fund. Here you are able to see this how this fund manager is able to beat this healthcare index by consistently performing better than the index here. So you're able to see there's some difference in there. Actually, there's a difference. The graph here, you will see the graph narrowing here, but if you see here, it's seeing the difference there. So here in this case, it's a fund manager has outperformed more this benchmark index here. This is the yearly returns of this fund, this fund, and the healthcare and equity pharma, how it performed. See, it has fallen more than this index. This 2008 fall. So as I said, this fund is performing consistently in the last 5 years compared to the last 15 years. This standard deviation shows how much the fund return volatility is there. So it's 17%, 17.44. What is it says actually? So you'll get the average of 32%, but it has the fluctuation of 17%. So you need to know the risk before investing in this fund. This alpha is the return over the benchmark index, healthcare index. So it shows how the fund manager is able to beat this healthcare index consistently. Then if the Sharpe ratios or no ratio is a higher value, that is very good for the fund. So now you see the Reliance Pharma fund. So like I discussed before, it's a growth, dividend, and asset and expense ratio. This is the 37,000, like same graph between December 1 2012 to December 1 2015. 37,000 invested monthly SIP of 1,000 rupees. Now it's showing 37 and 58,000. So it is the return since launched 26%. 2004 it launched. So 5 year it has given 21% here. So this funds also has the same fund style, having the large cap companies of growth and blend value. Here we has a different portfolio of companies: Abbott India, Sanofi India, Cipla, Divis Laboratories, Sun, and Ipca Kerala Healthcare. Let us go to the risk parameters and performance of this Reliance Pharma fund. So here you can see this actually this Pharma fund, Reliance Pharma fund has trailed this benchmark index. Here you are seeing this red graph goes above that black graph goes above this red graph, showing that it's trailing this benchmark index for this comparative period of time from February to June for the 1 year. Then you're able to match it, then it's able to beat it recently. So if we see the 3-year period, so you're able to see the more funds performance in the 3-year period, how it performed the 3-year period, and comparatively here. So this fund is able to match this benchmark index consistently. This Pharma fund is able to beat more than this benchmark index consistently for 3 years. So this you can move for the 5 year, 7 year, 10-year period, whichever period you are comfortable with. So this is the worst period and best period. This best period 2009 to 2010, it has gained 175%. This is the alpha. So here we see this alpha ratio here. This alpha is SBA Pharma has given 2% more than the beta is somewhat Reliance Pharma has relatively less, but Sortino ratios, this has better for SBA Pharma. This RP ratio also is better, so it shows how the fund manager able to beat that index compared to the risk-free returns, the standard deviation mean ratio. So comparatively doing we are seeing the better performance from this SBA Pharma fund for the past 5 years. So I have preferred SBA Pharma fund for its better performance on the large cap and the selection of stocks. So please check your financial advice before investing these funds. Have your risk profiles analyzed properly. So because sectoral funds has a high risk, and so if you have any query, get back to me. Thanks for watching.